Welcome back to the next video in this business planning series. In the previous video, I started the cash flow forecast by adding a asset forecast and liability forecast to our business planning template that we're creating. We're now going to move on and actually create the cash flow forecast. So let's jump to Excel and jump right in. So a quick review of everything that's been done so far. I have explained what the expenses forecast is, and we've created a 3-year expenses forecast with totals down the bottom here. I've done the same with sales forecast, so I've explained the sales forecast, and we have 3 years of sales forecasts and totals down the bottom. The asset forecast and the liability forecast. With the asset forecast, we have depreciation and the closing balance on the forecast. On the liability forecast, with the totals and also the interest. Now, it's important to mention at this point that the liabilities that we're entering here, these are the payments for the liability. So there's tax payments, they'll be entered in here. If there are payments for loans, they will be entered on here also. This is not money into the business, this is money out. It's the liability forecast. So we're now going to move on to the cash flow forecast. So we have a blank canvas in a way. All I'm going to do is change the width of C, column C, by hovering between C and D, and I'm going to move that to 229. This is just to make the template printer friendly. Once again, at the top left here, we're going to put the business name. So I'm going to put the Bookkeeping Master. And just to make this uniform with these other templates, I'm going to make it underlined and bold. And then underneath, we can put cash flow forecast. And we're actually going to create 3 years of forecasts here, so we can put cash flow forecast year 1, just like so. In A10, I'm going to put month, underline and make it bold, and then D1, I'm going to put month 1, then we have month 2, month 3, and you want to carry on until you get to month 12, which should be O10. Now what I'm going to do is highlight all of these columns, and I'm going to center them by using the center button at the top here. In A12, I'm going to put opening cash balance, and highlighting that row, I'm going to make it bold because it's the opening balance and the closing cash balance which are the most important figures on this spreadsheet, on this financial document and forecast. So I'm going to make those figures bold. Looks pretty good so far. So A14, we're now just going to list down here all the figures we need to include on the cash flow forecast. So the first one is sales money in. We're then going to have other money in, expense money out, asset money out, and liability money out. So we have cash in from sales, we have other money into the business. There could be investments, it could be loans. Expense money out, so this is from the expense forecast, asset money out, and liability money out. So all of these headings, apart from this one, other money in, are just taken from these forecasts that we've created, and I'll go through that in a moment. We then need total money in, total money out, and closing cash balance, and I'm going to do that in capitals and once again bold, and I'm just going to create a border down here just to make the figures stand out even more. So let's put a border above and below the text. So that's how your template should look so far. Now, pretty easy so far. It's now time to enter all the formulas because most of this data on the cash flow forecast is going to be automated and taken from the expenses forecast, sales forecast, asset forecast, liabilities forecast. But before we do those formulas, all I'm going to do is highlight the whole forecast here, right click, and I'm going to make it into currency with no symbol. Okay, great. So month one, the opening balance, that's always going to be 00. Not for any other years, just the first year, because the first day of the business, there's going to be no cash in the business at all. Now, sales money in, what we could do is do month one, sales money in, and simply just bring in the figure from month one on the sales forecast for year one. So year one, month one, the total could go in our cash flow forecast as month one, year one. And we're simply just bringing the data across. But what you have to bear in mind is there could be payment terms. If you're selling products instantly, when cash is exchanged for goods instantly, then there won't be any payment terms. But if you are offering products on credit or offering services on credit, there could be a delay in getting payment. So even though month one there are sales, the cash for those sales might not actually come in until month two. So you have to really think about that and think about the payment terms you have in place. If you're not offering any credit at all, then it's simply just bringing in the figures from month one to month one on the cash flow forecast. But let's just say there are payment terms. So sales money in for month one is going to be 0, but going forward, we have month two is going to be the total of month one on our sales forecast. So what I've done there is click equals and then go to the sales forecast and click the figure, the total that I want. And I can carry on doing that. So month 3, sales money in for year 1 is going to be sales forecast, month 2, total money in. And all I'm going to do is repeat that across the whole template. And then month 12 is going to be month 11. This is all based on, say, 30-day payment terms where the sales in month 1 will be paid in month 2 and so forth. So that's sales money in. That looks great. Really happy with that. Other money in. Now this is the only part of the forecast that is not going to be automated. Other money in is going to be bank loans, investments, any cash into the business that is not through sales. So what we could do is put 10,000 here, and then if you right click on the box, you can add a note. So if I click new note, what we can do here is say bank loan Barclays. So that way, if we need to refer back to this cash flow forecast, there's a note just here when we hover over to tell us what this other money in is. It could be after month 3, we have another bank loan entering of 5,000. Once again, just right click, go to new note, and we can put bank loan, this time HSBC. If the owner is putting money into the business, that can be recorded here too. Expense money out. This is similar to the sales forecast in the sense that we're just bringing totals across. We're going to create formula to do that. And it's similar with the sales forecast in the sense that if these expenses are instant, then we just need to copy month 1 to month 1 on the expenses forecast to month 1 on the cash flow forecast. But if our expenses are on credit, say 30 days, we need to account for that properly on the cash flow forecast. So let's just say the expenses are instant. So let's do equals month 1 will equal month 1 on the expenses forecast, and month 2 equals will equal month 2 on the expenses forecast. And once again, just do that right across. Now at this point it's worth just checking that this is all correct. So in these equals they should all say sales, which they do, and it's looking fine. And then in the expenses they should all show expenses, and that all looks fine. So asset money out is simply, once again, just bringing these totals across. Hopefully you can now see why it was so important to create these other forecasts. It all becomes automated. So as we enter money into the asset forecast, the cash flow forecast will be updated.
And as the sales goes on, you'll see that the profit and loss and the balance sheets are also updated.
Okay, so that's the asset side of the cash flow forecast done. Liability side, once again, just doing the same thing, bringing the totals over from the liabilities. So these are the repayments of liabilities. It's money out of the business. And once again, I'm going to check these. That's all liabilities. That's good. That's all assets. So that's good. Now, total money in is simply going to be equals the sales money in plus other money in. So on my spreadsheet, that's D14 equals D14 plus D16. For month 2, same sort of thing. So equals E14 plus E16, and then what we can do is just drag this across so it copies the formula right across like that. Total money out is just going to be all the money out, so equals expenses, assets, liabilities. So on my spreadsheet that's equals D18 plus D20 plus D22, and then I'm going to do the same here. So equals this, so it's just the total of all the money out, expenses, assets, liabilities. Total money in is the total money in, sales and other money in. Now our closing cash balance, the formula is going to be the opening balance plus any money in, so total money in, minus any money out. So if you think of the bank balance, it's simply money left over from the previous period plus any money in minus any money out gives you the new bank balance. So we click enter. Let's do the same for month 2. So it's going to be the opening balance plus all the money in minus all the money out. And then we can drag this across and hopefully that works. Okay, so that looks great. The last thing we need to do is the opening balance. Now the opening balance is simply going to be the closing balance from the previous period. So the opening balance for month 2 equals the closing balance of month 1. So let's just do this across, equals month 2, month 4 equals month 3. And I'm not sure if we can drag this across. Let's see if it works. Equals N28. Yeah, that works. It looks fine. So let's just check that this is printer friendly. Let's change the layout to landscape. Oh, it's not quite printer friendly. Let's actually bring this in a bit. Okay, so I've changed C to 0.83. It's now printer friendly. It all fits on one sheet. So sorry about that. Not 229, 0.83. Now our cash flow forecast looks a bit plain at the moment, lots of zeros, but that's because nothing has really been entered here. If you see that I start entering figures in here, then we have our automated totals here on the expenses forecast, our automated totals here on the expenses forecast, and then these figures are updated on the cash flow forecast. So you can see we have total money out, now appearing expense money out. If I enter more figures, let's do the sales forecast now. Once again, this is all automated. The total down the bottom is automated, and these figures are appearing on the cash flow forecast. It's all automated. You can do the same with the asset and the liabilities. These are just random figures I'm entering. The cash flow forecast is being updated, and we can see forecast or expected cash over year one. So this is the cash flow forecast for year one. All we need to do is copy this. So highlight it all, click copy, go down to A40 and paste. And then we need to go down to A79 and paste. We can change year one to year two and year one to year three. So now we have 3 years of cash flow forecasts, but we do need to update these formulas. The opening balance is no longer going to be 0, but it's going to be the closing balance of month 12 from year 1. And then the opening balance for year 3 is going to be the closing balance of year 2. So on my spreadsheet, that's 067. We also need to update these formulas because currently all these figures are being taken from year 1 on the expenses, sales, asset and liability forecasts. We need them to be taken from year 2. So what we're going to have to do is just repeat the process. So month 2 for year 2 is going to be month 1, year 2. And we just go through and update all the figures. And by the end of this, you will have 3 fully automated cash flow forecasts that all are in line with your expenses forecast, sales forecast, asset forecast, and liability forecast. This video has been so much longer than I intended. I understand that this is not simple. If your Excel skills are very limited, if your accounting knowledge is very limited, this could be a challenge for you. But just rewatch the video as many times as you can. I also offer business planning services. So if you prefer that I just do this for you, just drop me an email, info@bpfs, that's Bravo Papa Foxtrot Sierra -online.com, or head over to my website, freebookkeepingaccounting.com. There are other business planning courses, there are other accounting videos that may help you. In the next video in the series, I'm going to go through the projected profit and loss statements.